pretty much just talked for 2 minutes and I wasn't, my mic wasn't on. Yeah, that's okay. So we're just gonna run it back. We just took an S tier setup, in my opinion. Uh, we have a 2 hour liquidity draw above us, which would be this liquidity here. And then we have the new day opening gap from Monday, which I'm still expecting to get. And then we have the new week opening gap from today, or the new week opening gap from this week as well. We entered in at a 2 hour order block, 2 hour order block based off of two or daily. It's a 2 hour refined PD array, which just means that it's the closest in proximity PD array to a daily level. The daily level is this red level here, which is a rejection block from the daily chart, but I'm expecting that it's going to be inversion, so I'm expecting that it's going to become support. We have model 13 here, clear low was taken out, fair value gap left on the take up, and then we also have one here, clear low was taken out. We're looking for a fair value gap in this area, and boom, we get a fair value gap in this area. Lastly, we have high probability fair value gap, which basically just means, you know, the 15-minute chart, that we're trying to enter in a fair value gap that is above the 50% line. And then added benefit, well, lastly, we have an SMT, which just means that we have a low in this example, because we're bullish, we have a low that has been taken out on the other two indices or one of the other indices, but the indice that or I said indices, the bond that I'm trading, the debt instrument that I'm trading, we see that we had a clear takeout of these lows, but we didn't have that here. So all those together make an S tier setup. We also have the added benefit of entering within the range extension of this opening price. What does that mean? That basically means that we entered in really close proximity to where they're going to usually have the manipulation. And we also see that manipulation with the SMT. So we're just waiting and seeing what happens. My stop is in a good spot. Um, it's doing what it's supposed to. It's an insurance policy. And today I'm willing to take 2 trades. So if this first trade is stopped out, I will take one more trade. So recently I started to implement a couple new things in my trading. They're things that I know that I could have been doing, but I just wasn't doing. However, whenever you get into a period of drawdown, drawdown is, it happens to everybody, to every trader. They go through drawdown. However, whenever you go through drawdown, you don't really want to change if your model just isn't working. Like if you haven't tested it for 6 months plus, and you don't know that it's like accurate, you don't know that it typically is what works in the market. You could start to amend things, I guess. But yeah, you should amend things because you haven't tested for multiple months. However, if you know that your model's working, you know that it typically works, that overall it is typically a good setup, and you're just going through a period of drawdown, you really want to focus on the mental aspects of trading and the emotional aspects of trading. So for me, that has been implementing earlier wake up time and implementing uh, the ability to, or the practice of meditating in my trades. So that's basically what I'm doing now. I'm meditating before, well, I'm waking up early in the morning, praying. Uh, then after that hour of really gratitude, mindfulness, and thanking God for just being here and for other people, then I have a 20-minute session of meditation that's focused on trading, but also about gratitude, what I love, why I'm here, things of that nature. visualizing the trades and letting them play out. This allows me to, be nimble, allows me to, when losses happen, it's just a loss. So it's just me clicking a button um, and just keeping it pushing. So that's really been helpful to me in being able to take trades after losses because I've noticed in the past that I definitely, after a loss, the next day or the next session I would trade, uh, I could be holding on to that loss. And that's just not something you want to do because every single trade is not the same. There are similarities, but not every single trade is the same. So we're just watching and seeing what's happening. Um, we could, we're gonna see what happens. 8:15 is the first news event, so that's in 7 minutes. Typically, I really love trading ADP, like because usually you have ADP at 15 and then a news event at 8:30, which is today we have the same thing. We have some import news and some job news at 8:30, and then we have ADP at 8:15. So usually what'll happen is ADP will be a Judas swing type of situation, which is just opposite of where I expect the price to go, or opposite of the draw on liquidity, I should say. And then the 15 or the 8:30 news event will usually be that extension that you're looking for, or right shortly after 8:15. So we'll see what happens here. Uh, I think personally, I would have liked to enter at this level. It would have been ideal for me to enter here. However, I just wanted to make sure that I got filled. I'm not really tripping about it, and it still is a model 13. I still entered it at 2 hour PB rate. All the boxes are checked as far as my trade goes. So we're just watching to see what happens. We got 5 minutes and 9 seconds until the news event. And like I said, if I am stopped out, I'm okay with entering another long position today because I plan to do it already. And then sometimes you do have to pay for information in the market, and you just use that information to your benefit and keep it pushing. So otherwise, or yeah, 2 hour chart is a pretty, I'm not gonna say obscure, but it's not normally what you see. It is a really good balance between the hourly chart and the 4 hour chart, and I feel like that's the reason ICT uses it a lot in its bond trading, and I just follow suit. So that is the reason why I do use it. If anybody was wondering. So when you guys trade, smile. Just an added tip, it definitely helps. Um, I listen to this trade psychologist. And I gotta verify this info, but I definitely feel different when I smile versus when I don't. But your brain actually doesn't recognize if you're faking a smile or if the smile is real. So smiling really helps you put your body at ease and lets it know that you're you're not in a fight or flight situation. You're just trading. Got a minute until ADP. You just released. That's three ticks. I want to move one tick up and save some profit. Well, I use the trade management from ICT's video about trade. Well, pretty much all the mentorship videos has it in them. I use it. So basically, we went three ticks ahead. So that is 25% opposition. So I'm going to secure a little bit of a stop. The fact that we went up for ADP is a little bit, I'm not going to say alarming, but it is something to note because that could mean that ADP is used in the same way I was saying it's used in a Judas swing type format, but we just be doing the opposite. Like we went up and then we can go down on the 8:30 news event, but we'll see how it plays out. You never want to overcalculate minimum fluctuation in price because it will have your body doing a lot of stuff that it just doesn't need to be doing. The focus is price continuously drawing to where your limit order is, where the liquidity you expect is. So for me right now, the first draw is here. We're about to have 820. And another good thing about ADP, the news event, is so we had that little skewer motion, right? And Normally, what'll happen is ADP will be the low, and then 820, which is CME open, will be the expansion, and then you have the further expansion at 830, where normally 820 typically can be the low, and then the expansion starts to come around 830. So I'm liking what I'm seeing in the industry. In I keep calling it the industry. Sorry, so I like what I'm seeing in the dead instruments right now. Notably, the fact that we have this really clean and clear uh, SMT that is playing out. I'm also going to move this back a little bit so you guys can see a little bit more what the price action looks like. You guys are good. So once we get to 50%, so that's 5 ticks from my entry, we're going to move the stop up to half. So 3 ticks at drawdown, meaning that um, at 1701 to the clear of this, I'll be moving my stop up to right here. So one more tick and I'll move that stop up a little bit more. ADP is now coming out, or pay down ADP. CME just opened, so we're going to see more volume. We're seeing that the 5 year is being a little bit held down in its movement. 8 minutes until the 8:30 news event, which is a jobs claim. It's not the biggest jobs claim news event, but markets are really that initial jobless claim, import exports, and then there's a high impact balance of trade as well. So we're gonna see some movement at 8:30 for sure. So remember, once we get to 117.01, I will be moving my stop up to 3 ticks because we're halfway there. And then once my position gets to 1702, 117.02, I'll be completely making a stop break even. So right now I'm thinking that they're building in the idea, the algorithm is building in the idea with all these taps up here and then coming right back down one tick, tap up here, then coming back down one tick. It's building the idea that this is some sort of resistance level. And it makes sense why it would do that because right above us, this is a daily fair value gap. I'll go to it right quick for you so you can see. I'm not capping. Daily fair value gap right there, Bitsy. We just actually got to it. So I'm going to move my stop up to half. The reason I was saying that also is because they build a lot of liquidity above here. A lot of buy stops above there. A lot of people who have a sell limit above that, like as far as like trying to protect their short position, and then they could ram through this here when the news event comes out. That's what I'm expecting. But you do have to take into account that this is a daily city. It could literally just be going up there just to roll over. So I'm actually gonna move my stop up one more tick because I don't. It shouldn't come back below. And best case scenario, we close heavy bullishly, like thick body candle, one tick below the high of the candle would be the best. Like right here, this would be a good close of the candle. Right now, I'm looking at the fact that we haven't cleared this, and we have a SMT right before the news event. That's why I want to kind of even reduce a little bit more risk. Just gonna take a ticket risk on this. Nice. Stop at that break even now. Cool little trade there. Made back the loss from the previous day, and that's what you do. And there we go. Done with trading for today. Nice little gain. I'm not even call it little. For so things I did today, remember that I really love to commend myself right when I'm in the trade. That way you could just know exactly what you did well. Things I did well today. I didn't panic when my stop was getting, within 2 ticks of getting touched. Um, I have been waiting before I was entering between 7 and 9 a.m. However, through counsel, through getting with the Lord, I decided to really narrow my focus between 8 to 9 a.m. 8 to 11 a.m. is when my full session is, but most of the time I would like to be getting filled with my order as far as like the entry between 8 to 9 a.m. That wasn't indeed the case today. I took 7 ticks out of the market, which is enough to cover the loss that I had from the previous day, and then some. It is gonna end up going to 10 ticks, I'm assuming, because we are bullish, so we should just go to 10 ticks. Uh, but I'm okay with not being part of the move. It is what it is. I was able to enter here and take out a good amount of ticks in the marketplace. So we're expecting that price is gonna continue going higher though. I'm expecting that price is again going to this new week opening gap. So we just would have got 10 ticks here. Uh, Question is, what do you do when price exceeds what you intended to move for the day? Nothing. The easiest way to explain it is you do nothing. You don't. You be happy that you were in a position. Let me individualize it. I'm happy that I was in a position that would move my normal expected 10 ticks. However, today wasn't my I didn't plan to make 10 ticks today. I planned to make back the loss from the previous day so that my next position can be a position with higher risk. So, again, I'm expecting price to come to this new week opening gap here. Been expecting it for a couple days. Obviously, I expected it yesterday. We didn't get there. Shot out, came back, cleared some lows, and then did the same thing. But that's the that's the name of the game when it comes to trading. There's sometimes where you're gonna know where things are going, or you're gonna anticipate where things are going with a great deal of probability, and it just doesn't go there. It may not just be, you could be completely wrong, or it could just be not going there for that specific day. But things I did well today, I waited until 8 o'clock to enter, even though I was watching the market around this time. I waited until 8 o'clock to enter the trade. That's something that I did well. Another thing that I did well was I made sure yesterday. So I implemented this grading system, and I haven't changed my position or changed my trading strategy at all, but I pretty much defined it to when I'll be able to take a trade when certain pieces are missing. So like I don't want to always require everything. Today was an everything trade, so that's why I expected today to at least go to 10 ticks because S tier means that everything that I look for was presented in the trade. A plus means that one thing from that list of the S tier is taken away, and an A setup is when I have two things missing. But the things that I look for are very, very high probability in nature. So that's why I could still not name any of them like a C setup or anything like that. I don't take C or B setups. I only take A or above. So um, I took an S tier setup. I defined it correctly. I risked appropriately. I managed my stop appropriately. Um, I allowed the trade to make back what I expected to make. Um, and trying to see if there's anything else. I like the way that I managed myself during the trip. That was a really big point. That last one's probably the best one. And the reason why I say that is because every time I feel a little bit of panic come up, or every time I feel like apprehensiveness in my mind or body, I was able to breathe, chill out, relax. I'm just trading. And just keep that cycle in my head. Keep that cycle that I've seen this trade hundreds and hundreds and hundreds of times. I've seen it work more often than not. And I'm in the right side of the trade. Things I will do better is I would have liked to wait and enter at this fair value gap that I marked last night. Well, at this volume balance that I marked last night, because with that I'd have been able to easily take 10 ticks. I was able to take 10 ticks pretty easily with this trade too, but you start to get it that, that movement up and down movement. Whereas this trade here, you would have got filled 10 ticks pretty fast. So it wouldn't have even been time for that, to see if you weren't going to get it. But I would have liked to enter here because I plan to enter here. Why didn't I enter there? A bit of fear of missing the trade. So that's something I'll work on going forward for sure. Knowing that uh, time is the mover in price. Not price is the mover of time. Time is the mover of price. What I mean by that, the first 15 to 20 minutes of the opening session of the bonds is where the Judas swing will occur. And we saw that today. We saw that clearly today. This candle closes at 8:15. It made the low of the session. If you were to look at like a 5 or a 1 minute chart, you see 8:05 made the low of the session. So it would have just been waiting a little bit longer because I entered literally right at 8 o'clock. So it was almost like I really wanted to get into the trade, which is cool. But going forward, I will be entering at the level that I marked, especially if it's in close proximity. Now it would have been a totally different thing if like we would have been, at 8 o'clock, we would have been all the way up here, low made in like this area, the top of this fair value gap. Then I would have been less likely to try to get this. But since the proximity was really, really close, we were at that order block. The best thing to do would have been to enter here. But like I said, you don't want to harp on it too much. That's one thing I know I can improve on. Pretty much else, the trade was flawless. Another thing I want to improve on is because it's an S tier setup, you can allow S tier setups to move a little bit longer. So those are the two things I would have, and then we finally got this here. Those are the two things I would have, I will do better in the future. So that will be all for today. Since I won today, I don't plan on taking any more trades. We got a PMI coming up at 10, so there's probably going to be some type of trades offer there. But I'm cool with I'm cool with my pound of flesh for today. As far as the daily chart goes, I can go ahead and give these lines. I actually have no idea what. Actually, they're just a program that are for every day. But since it's a daily chart, it start acting wonky. Just in case you guys think I have some weird anything. But so going forward, I'm bullish. Like I've been bullish for the past full month now, really around since this area here. I've been bullish since about May 1st. So going on 2 months of bullishness. Why? Seasonal tendency first, and then market structure got along with seasonal tendency. That's really all I need for the daily chart, to be honest. Um, but yeah, and then also we're seeing something really big right now. I'm just gonna say this, and then I'm gonna close the video for today. We're seeing something really big. What are we seeing? We're seeing that we have a clear SMT on the daily chart of the debt instruments of the bonds and note. Now, this is really big because of the time we're at. Again, seasonally, this is a very bullish time. We typically make a low in the bond market between May and June. See, we made a low here in May. So we made a low here in May after clearing out some lows. Then made another low in June, which is an intermediate term low. We did not clear this, but we obviously cleared it in the bond, which makes me anticipate that we're going to start seeing large ranges, especially if we clear this high of this candle. So the next trade I'll be okay to take would be something in the AM, the 7 a.m. And remember, I was saying that I start trading at 8 a.m. now. However, on Friday, we have non-farm payroll, if I'm not mistaken. Impact. Yes, Friday we have non-farm payroll. So I'd be okay to trade between that 7 and a.m. session. Why? Because I don't want to be trading around non-farm payroll. I'll be okay to take, 6 ticks, 7 to 8 a.m., let the non-farm payroll move happen, and then trade after that. If it calls for, like, if we have a non-farm payroll move that clears out some lows, that would be something I'll be interested in taking. But it's neither here nor there. We'll see what happens on Friday. Hope you guys enjoyed the video. I was able to clearly define what I expected to happen. It did happen. And I also clearly define what I'm going to be working on to get better at in the future. So I'll talk to you guys later. Be blessed and remember that God has a plan to make your life as if nothing ever went wrong.